Hey YouTube, this is Zach with Achilles Financial, and today I want to highlight a stock that I think is a great pickup for any long-term investor. Today I want to talk about AbbVie, or AbbVie Inc. They trade under the New York Stock Exchange ticker symbol ABBV. This is a dividend king. It's not quite listed as a dividend aristocrat, which is a company that's been around for at least 30 years and has increased its dividend in all of those years. And the reason for that is because this company spun off of Abbott Laboratories about 10 years ago. One of the reasons I really like AbbVie as a long-term potential company is because they are in the biotech sector, but they are a huge company. This is a drug provider with their chief drug being something called Humira. One of the things that I really like about AbbVie is chiefly their dividend yield. This is something that was just increased this past year. You can see right here that they are currently providing a $5.20 annual dividend, which means the recent pullback that they had, you can see this drop about a week ago, provides an excellent entry point because it gives you that strong dividend yield. Now, the reason that they had this pullback is because one of the drugs in their portfolio, which is their JAK inhibitor drug, Rinvoq, is having an extended review period by 3 months. Now, because I'm not a professional in the biotech world, I don't want to offer my opinion on the FDA and how this decision impacts the overall company, but it was not taken well. This is something that is expected to be a key drug for them, and a 3-month delay means 3 more months of R&D and no potential cash flow. Now, do I think that that greatly impacts the company from a fundamental perspective? I don't. And the reason for that is you can see that even in 2020, which it was a rough year for a lot of drug producers, they still brought in record revenue, and that's something that they've continued to do going forward. Again, that has had an impact on their total net income, but it wasn't too bad as we did see that they actually increased their dividend last year. If you want to take a look at that, you can utilize TD Ameritrade's information, and you can see that they actually have the past dividends here. They went from $1.18 per quarter all the way up through Q3 of last year to Q4. They began issuing the $1.30 per quarter. So what does this look like, and why do I like this as a mainstay of a portfolio? I am a very, very heavy growth investor, but I do like to build up my growth stocks around a core that does provide me dividends. In my current portfolio, I do have all of 3 shares of AbbVie, but I do have my core of FTAI as a dividend producer, as well as Bank of America BAC. However, I do like AbbVie at this price, and I wouldn't mind putting additional funds towards it. One of the reasons why I like a stock like this is because when my growth stocks are going through an extended pullback period, such as we're seeing in 2021, and AbbVie will continue to produce. Due to the lack of volatility, you can see that even during all this up and down, you're only trading within about a $5 range. It did drop all the way down to about $101 a share. However, even with all of that range, it is still providing that dividend. And you can see that even over the past few years, 3 years, we've still had quite an uptick, although we're still about the same range that we were back here. The key advantage here is even if you had purchased in May of 2017 or 2018, you would have still been receiving that dividend that entire time. What you utilize is the Dividend Reinvestment Program, or DRIP, to have you purchasing additional shares. What that looks like if you actually utilize the income estimator that TD Ameritrade provides, then what you can do is actually see, well, how much would 100 shares provide me? So a 100 share investment, if we look at this, you can see is only going to cost right at $10,377, and that will continuously provide you that dividend income of $520 a share. As we just looked at the overall balance, we noticed that their overall income statement, we noticed that there is no risk currently that they would have to cut their dividend, which is why they just raised it. One of the things I want to highlight is you can see in May you would receive $130. Under the Dividend Reinvestment Program, that would actually be reinvested into an additional share, which means that you would then have 101 shares and some change. You'd have a little extra, so it'd be like 101.12 or something. So you now have 101. At the end of 4 quarters, you would actually have at least 104 shares. So now you can see that your overall income has increased to $504 a year, and your total position, if the stock did not move from where it's at today, would be worth $10,792. Remember that means that over the course of that year, your position had increased by right at $400, even if the stock did not move. So it continuously buys back in. Now, if the stock drops and that dividend stays the same, that means you're able to get more shares. This is a true long-term value investment. This is also one of the reasons why Warren Buffett later in 2020 made a healthy investment into AbbVie in the terms of millions or tens of millions of dollars. So this is one of the reasons why I really like it. To further emphasize some of the reasons why I like stocks like this, if you actually go into the options chain, and keep in mind that the options are not going to be that great right now because the fact this stock is a little bit, or it's not a big mover and it did have a down day. Some of the things that you can do here is, if you look at the calls, I want to be outside of the dividend pay dates because I want to make sure I collect my dividend. Now, the risk that an AbbVie goes up to 115 is low, but it could still definitely happen. What I look at here is I really like the $110 call for May. The reason for that is because it would get me right at or close to 2 additional shares, and I would get to keep my shares for that dividend reinvestment. So what I would be looking to do is sell the $110 covered call, which would get me, if we take the midpoint here, it'd be $180, which is close to 2 additional shares of AbbVie. Or you could go and buy a different stock. But one of the key things that you could do here is, again, just sit on your shares and then every quarter be able to sell a covered call for another $5 to $10 out the money, and make sure that you are not within the ex-dividend and dividend pay date range. You're able to collect an additional 2 shares here, an additional 1 share every quarter utilizing your dividend reinvestment. So for an extra 3 shares every quarter, you're able to finish the year with an additional $1,500 that you didn't start with, that will continue producing you additional income. So this is just some of the different ways that I approach dividend stocks, where when you have growth that is incredibly volatile right now, you can still have your portfolio working for you and going and making money for you. So this is one of the reasons why I encourage you to check out AbbVie and to do your own due diligence, as I'm not a financial advisor, but there is a lot of positive information surrounding this company. Just got to remember that this is not a company that we anticipate just shooting up to $125, $150 a share, and that's because they are a monstrous company. Again, $183 billion, and they've got nearly $2 billion in shares outstanding. So this is something just to check out. Make sure that if you do want it, that you get in before the ex-dividend date of 4/14, and let me know in the comments below what you think. And if you have any questions, feel free to drop them down there, or join our Discord where we talk about long-term investing on a regular basis. And last but not least, but if you find this content helpful, please leave a like and subscribe. Thanks everyone. Have a great day. Talk to you later. Bye.